This is that one. This couldn't happen again. This is that one. This couldn't happen again. This is that one.
Welcome. We are back. A crazy day in the market, the most volatile day in the market in a long time. We're gonna look at the VIX. I'm gonna explain why that is so. Let's put that music down a little bit. And tomorrow at 2 p.m. we have the FOMC statement coming out, and then at 2:30 p.m. ET, Jerome Powell is going to be speaking. So it's a crazy week. We're also getting closer towards the end of the year. You might see funds rebalancing to finish off the year and the quarter. So keep an eye out for all of that. Maybe some craziness. Hopefully a Santa Claus rally towards the end of the month, but maybe some selling off before then. All right. And the only reason I'm saying is hopefully a Santa Claus rally is just because I love the vibes. I love the vibes when it's around Christmas time and the market's rallying. Everybody's making money, getting gifts. We're going into a new year. I feel like the past couple of years we've had that, but we didn't really have a bear market the past couple of years. This year we had a bear market, so maybe not. We will see. If you're new to the stream, I'm going to be starting off with crypto, then other markets. Then I'm going to talk about my thoughts on the stock market going into FOMC and just in general for the next couple of weeks. And then after that, I'm going to be looking through individual stocks. So it's going to be a good time, hopefully. All right, let's get started with crypto. Bitcoin is breaking back above this low from June. It put in a low around 17.5K in June. It dumped under that level on November 9th, and then it back tested it, flipped it into resistance on the 10th. Since then, that level has been resistance for a while, and finally today, after a long time of just consolidating just beneath that level, Bitcoin broke above with slightly higher volume. It's just a start, but it is a good start. I think it's been in this down sloping channel since about August. And right now you are starting to get back above that level. If we really zoom in over here, that level was also back tested at the end of 2020, pretty much to the date 2 years ago. We were at the same exact price on Bitcoin. It actually broke under level, got back above the level, back tested it, and then it ran and ran and ran to all-time highs. I'm not saying the same thing's going to happen again, but you're actually at the same exact area that you were at back then. So we will see what happens. Moving on to Ethereum, also has been back testing this break back above this blue inflection zone around 1200. It kind of flagged back into that support level, and right now it is breaking back above. The next resistance I see is around 1425. Volume is declining, but as long as you can hold above 1230-ish, 1200, I think it still looks okay. But right at 1425, you have these lows from over here, even this candle high from July 16th, and the 200-day moving average. So looking out for that next for crypto. Moving on to other markets really quickly before I talk about stocks. The US 10-year is still testing 3.5%. When we were up over here a couple months back, or just about a month ago, I said I was bearish. You were breaking this long trend line that you were holding. You had a bearish engulfing candle up here, and I kept saying 3.5%, 3.5%. That's the next level. You sold off just until that level, and you've been testing it for about the past week. The MACD is getting closer to green, so maybe you could get a short-term bounce. So you could probably also draw a little bit of a falling wedge, and it's actually currently testing a breakout of that as well. So not too bad short-term. We will see. Crude oil broke under 76, and it's kind of using that as resistance right now. That was actually a high back in July of 2021, and it was support in September and November of this year. It is currently being tested as resistance, but kind of similar to the 10-year, you're getting a little bit of a wedge here, and then you also have that MACD moving closer to green. So not horrible short term, but you still haven't cleared out those previous levels, so we'll see. Gold is testing a breakout above the 200-day moving average. It's been consolidating here for a while. You did get a bullish engulfing candle today, and your highest candle close since like July or maybe even June. All right, so that's a nice little move for gold. Silver also putting in new highs. It already kind of broke out and back tested about a week ago. At this point, you're getting a little bit of classic bearish divergence. You're getting close to overbought on the RSI. Can maybe even start to draw out a bearish harmonic pattern. So it's entering that, or it's not entering, but it's kind of close to that cipher or bearish shark territory. It's not really there yet, but that's something to keep an eye on. The dollar currency index is continuing lower after breaking under the 200-day moving average. Nearly confirmed hidden bearish divergence. Also trying to hang on from this support back in June. You're testing it for right now. If that breaks, I think the next level, like the next major level, is 101.4. That dates back to this low over here. There is a slight level over here as well, but that's nothing major. So that's pretty much it. And then finally, the Hang Seng Index for Chinese stocks. You're getting a test of the 200-day moving average. And that is really it for other markets currently. Let's talk about stocks now. A crazy day for the market today, and a very confusing time from a technical standpoint. And of course, that's how it tends to be when we have a major news event, not only today, which was the CPI, but also tomorrow, FOMC. So here's what is going on. I'm going to make this very simple. We're going to take all of these little lines off the chart, and we're going to draw just two levels. That is it. You are sandwiched in between support and the lower 390s, which you've been holding since you broke above that level on November 10th. You can see that 391 level is resistance over here, support over here, support here, resistance here, kind of resistance all the way back in February of last year. That 391 level has been the key support. If that does end up breaking at any point, you have this gap fill beneath you at 381, about 10 points lower. On the flip side, in terms of resistance, 410. All right, it was your high about 2 weeks ago. It was your high today when you gapped up. You pretty much gapped up right to that level and then sold off to fill the gap from this morning. That dates back to this high from September 12th as well. That gap was already filled when we made this move up to that level on December 1st. So you're right in between these two levels. Also, in between the two levels is the 200-day moving average, this yellow line, which you are continuing to test. You close slightly under it. You're still just right around it. I wouldn't say this is a clear breakout or rejection of the 200-day moving average just yet. It's way too early to tell. You're still just testing it. But the overall move you get out of this area is probably going to be very easy to use as the next predictor of the next couple of weeks, whether it's good or bad. We're just waiting to see which move happens first. Maybe FOMC is the catalyst for that, but this is about a 5% range, which, I mean, in this crazy market is not an insane amount, but it is something that's going to take some volume at least. All right, apart from those simple levels to make things a little bit more complicated, you've been in this descending broadening wedge all year. You see these two green trend lines. You've been in that all year, and you're still testing that same area. This blue zone is also resistance. There is a lot of different things lined up here. Really, all that matters is which way you break out of this green box that I just drew. It kind of feels like I'm using crayons on this chart right now. There's just that much going on, which makes it crazy confusing. But yeah, volume was high today. Very crazy day in the market. A lot of movement. We go down to the 4-hour chart. You see on the daily, I actually have this demand line chart like this, where you basically broke down and then you gapped up today with the CPI, but now you're kind of breaking down again. On the 4-hour, I have a slightly different view, which is basically this wedge. And I just moved it from here to redraw it. And it's either you break above 410, 411 first, which would be your bullish breakout, or you break down somewhere from this region, which would be your breakdown, maybe gets you to test 391 again. And if you do that, I mean, you see what I just drew out. That's kind of like a double top, a head and shoulders pattern. Getting back down to 391 and holding it, I think, is very unlikely. I think if you get back down to 391, you break it. Maybe not on the first test because there is some support there, but I just don't think it holds because you've held it 1, 2, 3 times, but now you've also double topped and you have a lot of demand lines that you could be breaking. If you test that again, I would be surprised if it held for more than a day or two. That's all I'm saying, but we're not even testing it for right now, so we'll see which happens first. On the 1-hour chart, you can see that same exact zone. I have a lot of different zones. The main ones that are important are the yellow ones and this blue one, which is what you've been holding recently. I have a lot of crazy levels charted here. I mean, if we zoom out, there's so many. These just date back to like way back, but this is currently where you're at for the SPY. On the VIX, I did want to talk about today's candle. The spread on this candle is 20% from the low to high. I was looking back, trying to find another day where you had a 20% spread candle. Even if we look for the biggest candles, they weren't a 20% spread. All right, so this is tracking the volatility for the market, and you have not seen this type of a candle in I don't know how long. Pretty much since September 13th, unless I'm missing a candle, but I don't see any candle that's that big since then. So you got a very big move today with that gap up. In the market, you ended up closing this gap. It was a very weird day. You kind of touched the 200-day moving average. You closed right around this 22.5 level, which is support from over here and over here. It's very confusing and rare. You don't see this price action often. If we're going to be looking at this as a wedge breakout, these two white lines, I guess you also had maybe a little bit of a bear flag forming off that breakout. And then I guess with the price action today, you broke down from that. So there is a little bit of a short-term breakdown for the VIX, but you are still just hanging around this little consolidation level on lower time frames between 22.1 and $23. This even dates back to all the way here, was resistance over here and support over here. So that's the level you're currently testing on the VIX. You've got a little bit of hidden bearish divergence, but I don't know. We were just talking about this in a call I was in, and a lot of the moves off these lows have happened with gap ups like we have seen recently. So we got that gap up. If we go back over to the weekly, I know Zeke, who is in the chat right now, has talked about this a ton. Not only these triangles, which we're in another one right now, but this range we've been in pretty much all year since the beginning of the year. We're much closer to the bottom of the range than you are to the top of the range. You also have classic bullish divergence on the weekly. You're kind of also testing this supply line. It's a very weakly drawn supply line, to be honest, but you're in an area where if you're going to do what you did the last 3 or 4 times, you would expect, or the expectations are not good in the market, but probability wise, this would be next. Try not to sneeze. All right. So that is what's going on with the VIX, the QQQ. Let's move on to tech right now. It's a little bit confusing. This green zone has been the main level around 283. You ended up gapping up nicely above that. You almost came down to fill the gap from this morning, but you didn't really perfectly fill it. And right now, I guess it's just a new range being developed between like 280 and 297. So that is the level that the Qs is currently testing. Maybe a little bit of a Megaphone pattern is also developing, something like that, which I just view as neutral in this scenario. The Russell 2000 continuing to reject 188, these two lows from February, as resistance. Also struggling to get above the 200-day moving average. There was a lot of selling volume today after the gap up. So the price action is not looking great, to be honest. This was also kind of like your back test of the breakdown of this bear flag, those white lines, those white trend lines right there. It's kind of like you went up for a back test of that breakdown and you successfully back tested it for bears. You didn't literally tap it and flip it, but I mean, that's pretty much as good as it could get. That's also a very slightly lower high. You could see we've been putting in these highs and each one has been slightly lower than the previous one. That's not great price action. If this little swing low gives out, then there is probably room down to around 173 before you have your next major support. That dates back to 2018 highs. All right, so those are pretty much the indices. Just a quick look at the ARK ETF. It's continuing to test 35. It's been doing the same thing since October. A lot of indecision here. It seems like you have more classic bullish divergence, but it's kind of confusing. All right, so that's what's going on with the indices. Let's talk about some swings now, Fisker. Really not much has changed. It had a very nice morning when you gapped up. You went to test $8 again, and you very harshly rejected. You pulled back about 10% intraday after testing $8, which was support earlier this year, but it's now flipped into resistance, unfortunately. However, you did get a bad rejection today. It's an ugly candle, but you're still holding this support that's been developed around $7, as you can see over here. You might have a little bit of hidden bullish divergence developing on the daily. On the 4-hour, I still view this wedge as close to potentially breaking out. It was a failed breakout today. That's the moral of the story. But you're still making higher lows. You're still above support, so it's not the end of the world. You ended up just closing flat. But of course, it would have been much more nicer if it just held out over there, but it is what it is. And then unfortunately, the coin swing just gave out today. There's been a lot of news involving FTX and everything. I don't know if that was the reason for this. Let me see. They moved like the news section on TradingView. I can't see where it usually is, but coin was unfortunately attacked today, or that's probably not the right word to use, but it sold off today. Huge bearish engulfing candle, new all-time lows, new all-time low close, pretty decent selling volume. It hit the stop. It did not work out. Trades fail. And yeah, the hope was that it held the same exact level it held twice before. However, was not able to. It never broke out of the wedge, and you broke under support. There's no horizontal support under you for right now, so we'll see what happens with that next. But that did fail today, and that's pretty much it for like the breakdown tonight. I know I haven't really looked at the chat, but what's up, everybody? Yanu, how you doing? Peep your Discord DM, champ. My SPY observations. I'll take a look at that right now. And let me just see what that's about. All right, so probably pull this up on the stream. Shout out to Keanu Trades, by the way. Thank you for having me in the spaces today. You guys have been crushing it. And let's see. So Keanu Trades just posted this on Twitter. There you go. Look at the SPY yesterday versus what do you notice? My observations, both trend days and not choppy at all. Yesterday was like an uptrend day. Today was a gap up and then a downtrend day. As you just said right there. So what's today's trend? If you can answer, it's either choppy, hasn't been established, or isn't clear. But yeah, pretty much you went up, you went down. And a lot of that move happened overnight with the gap up and CPI. So overall, we're just kind of testing the same areas. I guess yesterday made for good calls and today for good puts. We will see. That's really where you're at for right now in terms of the overall market. And let's move on to some large caps now. Let's start with Tesla, which has been getting destroyed. It had the wedge. The way I had it originally drawn, it kind of broke out for a little bit, but I redrew it. This is bear market stuff. You draw wedges and then you have to keep redrawing them. Welcome to the bear market. But yeah, you did take out your all-time, or not all-time low. You took out your yearly lows today, flushed under that level. The next level I see is 151. It's some resistance from fall of 2020. And this was your highest volume on Tesla since November of last year. So in over a year, this was your highest volume on Tesla. The last time you had this high volume, you were at all-time highs. And just a year later, you're showing the same volume at 52-week lows at least. So that's really where it's at. It's close to level. On the weekly, it looks disgusting. We broke under the blue support level. There's pretty much nothing here. It's like a major head and shoulders that you just broke down from. So, maybe it gets a dead cat bounce off that support level, but it has a lot of work to do. Apple was flat today. It's just kind of been, I'm going to extend this out. It's just been kind of creating this triangle pattern. You've really not gotten any sort of break that's held in either direction. So I'm just extending it out for right now. But I say it's just indecision. I think it's done a decent job of holding up. But again, the failure for a lot of stocks, especially large caps, to break above the 200-day moving averages, let alone the SPY still testing the 200-day moving average, is something that is concerning to me. Next up, AMD. Looks like we have a fresh chart here. This was a swing that recently did not work out, but you can see over here it's testing the zone, which is very, very important. So it's right at it. It's kind of testing a breakdown of it right now. It got back above for a little bit, but now it's trying to, or the bears are trying to get it back under. That's really it. Just keep an eye on which way the zone breaks. Google, 94.5 is the big level. That was your lows from like right over here. If that breaks you first, you've got a gap fill just under that at 93.87 kind of. And then another one at 89.5. So that's a level that you're hoping to hold. If it does hold it, you have some resistance right at 100. It dates back to this support over here, and even resistance recently. Amazon was up 2% today. It's actually maybe working on a double bottom, this first low from November and this recent low from the past week. It ended up holding that gap fill level. On the weekly chart, it's still in this zone. Tesla's a little bit different. Tesla actually broke under its zone. Amazon's still holding it. You've got classic bullish diversion, so it's not the end of the world just yet. I don't know. It's kind of like a dragon pattern too with this supply line breakout. So as long as you can hold this 87 support that you've just recently cemented, then it's okay for right now. GameStop, this was sent to premium members in the bearish watch list very recently. It might have been this weekend actually. Let's see. Yep. So there's, you see, I have a bear side and a bull side to the watch list I send in premium every weekend. GameStop was on the bear side, and really what I was looking at was this range. It was breaking down and retesting it, and you can see it broke down from the range, retested it, and now it's going lower, heading closer to that 19.54 level, which was support in March and May of this year. So it was a very long-term range. You did break out of it for a little bit, and I alerted calls like literally on this day that ran like, I don't know, like 1,000% or something. And then you broke down, and now you're kind of continuing that breakdown sell off. Meta outperforming, up 5% today. It was able to kind of hold up. The 4 hours weird. You're kind of retesting the zone, which, you know, is very important. Let's go back over to the daily. We go all the way back to 2018. This was a low in December, I believe, and that's been acting as resistance. It was also a recent low on October 13th. So 123 is the big level for Meta. It broke under this demand line, is kind of retesting it as a supply line. We've got a little bit of hidden bullish divergence and a gap to the downside at 115. Zeke in the chat saying news on Meta today about TikTok. Next up, Microsoft. This one is back above, surprisingly, back above this blue zone. It was testing a breakdown of this bear flag, the yellow lines, and this blue zone for a couple of days. And then today with the gap up, you got back above the blue zone, which is key. It was support over here and resistance all the way over here. Ran right up to the 200-day moving average and tapped that level, pretty much sold off. So those are how large caps are doing. The main concern I have in general is the 200-day moving average. You're just not breaking above it for the most part in a lot of names right now. And another rejection of that is kind of the same thing we saw on a lot of the other bear market rallies this year. It just reminds me of the past, at least for right now. Unless the SPY, I don't know, I sound weird. Unless the SPY, like, I kind of like, what's it called? You know, in like a video like freezes and like buffers, I kind of do that like in real life. But unless the SPY gets above 411, it's just looking ugly to me. 411, that changes everything. Break above it, then you're above this high, you're above these two candle highs, you're outside of this major descending broadening wedge, the 200-day moving average. You have some room there as well. There's gaps to fill, but twice now it's rejected that level. So we will see what happens. And again, tomorrow we do have the FOMC, so that's another factor to take into account. All right, so if there's any ticker requests, feel free to share them right now in the chat, and I will take a look. for a few minutes here. If you want me to look at any charts, drop them in the chat. Right now, hit the like button, hit the subscribe button, check out the links in the description. Free Discord, free course, premium, social medias, all that good stuff. So first up, US. Yeah, this is why I use stop losses. I don't remember what this is from, but it actually might have even hit the first target before it hit the stop. But look at that, broke under this right shoulder of the potential inverse head and shoulders because it failed to break out over here, and it's just been getting wrecked. But might have a little bit of a new wedge forming over here. You either use that as a wick or just kind of tread this. It might be testing a breakout. I think the most important level is 670-ish. It's been holding for the past month, and that is really it. The classic Palantir coming in from the guy in the chat. Also, shout out to Argentina for winning today. We're still close to Messi winning. No offense to Ronaldo fans. Same thing. It's still in this megaphone pattern. It's been holding this area. That PCZ of the shark, it's held it around $7. And gapped up today, but you got a gap fill around 730-ish. And you probably broke a little bit of a supply line here, and maybe you're just back testing that for right now. And you're saying there's a triangle on the weekly. To me, that looks like a little bit of a descending triangle here, something like this. So just see which way it breaks out. And ARVL, Zeke, that's also a good idea, thank you. I keep forgetting to do day trade recaps. It's like literally in the intro of the stream, like that's like the last thing or whatever, and I never do them. So I should start doing that. Alright, so next up, ARVL. Well, this looks horrible on the weekly. It's going down and down and down. There's not much I can really do on this one, and I think really technicals are just not important, but if you want, there's your supply line, and there's your demand line. They've actually held pretty nicely, to be fair, but those are your two levels. And then next up, LE. It's testing a breakdown of this support level. It was support back in 2019, 2020, this October. You're testing it once again. This is the huge level. If you break that, the next level I see is $5.50 and then $4. If you can hold it, you got a gap fill up at 11.11 pretty much, which dates back to 2017 as well. All right, CLOV. I always wish it the best. It's just, I've been saying it on the stream recently. There's not much to talk about the chart. When there's more variables on the chart, literally this is all I've done for CLOV this year. Well, not this year, but for the last few months. All right. Just moving the same supply line. That's all I've been doing. So it's like you get a little breakout, you get a little move, and then you sell off again. So until that pattern stops, it's just the same thing, which is why I really haven't been covering it. But I'm not saying it needs to go up for me to start covering it again, but I need to see some sort of another pattern or just anything different. It's very repetitive. Cattle futures. Oh, okay. Let's see what's going on with the cattle. I don't know where that just went. There we go. So, it looks like I charted this a long time. Look at that triangle breakout and how that played out. It looks like this just broke out of a bullish rectangle. So you just got the breakout, which means your previous resistance around 154 is support now. And then the support of that range is 151 itself. And that's pretty much it for live cattle futures. That's really it. What is this? Contract switch. That's cool. I haven't seen that because I don't really look at futures too much on TradingView. What's up, Gold Miner in the chat? And yeah, so first off, PLBY. It looks like it kind of got like a supply line breakout and has started to move a little bit. Was in a downsloping channel. You're starting to get some higher highs and higher lows. It's kind of like if you go on like the 4 hour, probably looks like a 3 rising valleys pattern, which is a little bit different than a bear flag. It's a little bit more symmetrical on your moves up. But I think this zone is what you want to see it get back above and hold above. It was support here, consolidation here, resistance here. You tested the breakout here, you're back under, now you're back in. This is a big zone around $4. And then you kind of have like a zone of support down over here. But within these two levels, resistance and support, we've been making higher highs and higher lows, which is nice to see. You would just hope for that volume to hold up. That's also going to be important as well, because if you start losing volume, then you worry about that classic bearish divergence on the MACD, not on the RSI, and then you have to keep an eye on that as well. SOX, if this is the right one, looks to me like it broke out right over here, back tested the breakout and consolidated right pretty much in a range, and right now it's testing a breakout of that consolidation range and the 200-day moving average. And then NVIDIA almost hit the final target. This was a premium swing trade I alerted, down at 131.5. Currently it's up about 40% since that swing trade alert. Also yesterday I alerted NVIDIA calls, which were up like 300%, in case it was alerted as a day trade, but the contracts expired on Friday. If anybody overnighted, they were up like 300% at the open. The reason I alerted NVIDIA calls yesterday, I literally alerted them like probably somewhere right there, was this 15-minute major cup and handle I saw, and then also on the 5-minute there was a descending broadening wedge. I alerted the calls somewhere over here. They were up 40% same day at these highs, and then this morning was up 300% with that huge gap up. But just overall, let's go back over to the 4-hour chart. It's approaching some resistance. You can see these highs from August and June. If we go over to the daily chart, it's above the 200-day moving average, and it kind of was able to hold this major ascending broadening wedge, so it's not doing bad. It's actually outperforming, I would say. I don't know, this, if you were to, I'm just saying, if you were to gap down tomorrow, just have a big flush day, that kind of sets up the reversal pattern, which would be the abandoned baby, which is kind of like a gap up doji candle. And then if you got a candle like this tomorrow, which was red, that would be like a perfect reversal candle. I'm not hoping that it goes down because I wanted to hit the final target, but I'm just saying it's like 2 out of the 3 parts of that candle pattern are kind of there with huge volume today. It's probably at the upper Bollinger Band too. It's above the upper Bollinger Band for the first time in a long time, like, so it might be a little bit overbought near resistance, but it's been pretty strong up until now. And then also I wanted to talk about the premium alert from today. Thank you, Zeke, for reminding me, because I always forget to do that. But yeah, I was pretty busy this morning, so I really wasn't looking at much. And then I scanned for about an hour, and this is really it. Look how simple it is. Let's find the time period on it. At 2:51, I alerted SPY puts 0 DTE, which means they expired today. Pretty risky trade, which is why I said only put in what you're fully willing to risk. And for this trade to work out, it pretty much had to go exactly in the direction I wanted to right away. Because if it didn't, they would have gone down 20% or so, and I would have marked them red. So it was a big risk. It's not easy to pull off trades like this, but when they work very nicely, as you can see. They went pretty much 200% profit in 10 minutes. Let's see. I was looking at this ascending broadening wedge. It was just pretty much dropping to test the breakdown, and I alerted it right over here. These were the puts, and you pretty much just broke down. As you can see, you first tested the breakdown. They were up 80% in 4 minutes. Then you continued breaking under this first support level I had drawn. Then I had that next one at 400.45. And it pretty much, let's see where it dropped down to. What was the time there? 3 o'clock pretty much. So 3 o'clock, it dropped pretty much into that level. So I alerted the puts right over here. And once I alerted the puts, I had these 3 orange lines already drawn out. It went down to kind of the last one, maybe a little bit lower. And then that's really reversed. So very quick, 10% went up 200%. I mean, 10 minutes, it went up 200%. Played out nicely. Of course, it could have gone down more. And then probably the next level would have been 399 because that was your low from the morning or the afternoon. And then also your gap fill from the gap up yesterday. But it went down to that final level I charted. And then it kind of reversed there. So they must have lost value after that because it was the end of the day. But very quick and easy profits. That was the only alert today. Currently on the week, this is how the alerts have been. Started off with a loser, got 2 little wins, even though the NVIDIA calls were actually up 300% at the open. Where did I send that message? There you go. But yeah, if you want stuff like that, the link for premium is in the description. If not, that's all good. But that's going to be it for tonight's stream. Thank you for watching the stream. Hit the like button, hit the subscribe button. Follow me on Twitter at ChampionVibe. I'll probably be in Spaces tomorrow, so you can listen to that. And have a good night. Peace out.